So, what is the current worldwide inflation situation? Everyone is discussing a rise in inflation. It appears that inflation has reached levels that we would consider troublesome in many parts of the world. But this inflation has made profits for big investors like Warren Buffett. Now, there's something interesting about this man. He loves to take risks, and almost every piece of his advice has helped a lot of people. Do you folks want to make money during inflation like Warren Buffett does? If you want to know this answer, make sure to watch the video till the end. Hey guys, welcome back to another exciting video. Inflation has been extensively studied, and almost every billionaire or millionaire knows how to make money during inflation. So today in this video, we'll be discussing Warren Buffett and what his secret is to making money during inflation and how he does it so perfectly. Let's have a closer look. In the late 1970s and early 1980s, Warren Buffett battled inflation. He also noticed the long-term effects that persistent inflation has on consumer purchasing power, investments, savings, and business spending. Here are his thoughts on personal finance and investment in times of inflation. Advice about inflation from Warren Buffett. Everyone in the United States would be extremely happy if we just dropped $1 million into every family, except for those who have investments in dollar-denominated assets, Warren Buffett. He claims that holding a currency whose value is being inflated away by an excessive supply of that currency is the worst thing you can do in an inflationary climate. The loss of purchasing power is detrimental to savings, bonds, and money market accounts that pay little or no interest. This is perhaps the reason why in times of inflation, Buffett invests money that has been sitting on the sidelines. Instead of attempting to predict future inflation, Buffett examines the pace and trends of current inflation and modifies portfolio purchases while adhering to his long-term value investment strategy. Unfortunately, most firms will suffer during inflation in real terms. Over time, their income may increase somewhat, but to maintain the same position, they must continually invest more money in the company. You already know that the worst kind of business is one that constantly requires you to put more money down while not increasing your profits, Warren Buffett. According to Buffett, businesses with low returns on tangible assets struggle with return on equity since they must continually reinvest their profits into the company and find it challenging to raise cash for expansion and equipment upgrades. These businesses must make significant upfront capital investments in order to operate, making them capital-intensive in the beginning and dependent on their suppliers for price at the beginning of the production process. Avoid investing in businesses that lack the pricing capacity to cover their rising labor and production costs. Businesses who are unable to pass on their own cost inflation to customers run the risk of going bankrupt if they lack the funds or credit to continue operating when their earnings dry up. If you've enjoyed what you've seen so far, make sure to like and subscribe to our channel. Warren Buffett's inflation hedge. I'll say this regarding gold. If all the gold in the world were combined, it would nearly equal a cube measuring 67 feet on each side. Now that same cube of gold would be worth around $7 trillion at today's market values, which is roughly a third of the value of all American equities, $7 trillion. Having access to all the country's cropland, around 7 ExxonMobils or XOM, and $1 trillion in cash on hand would be possible. And if you gave me the option of looking at a 67-foot cube of gold the entire day, despite the fact that I periodically touch and caress it, I'll take the farms and the ExxonMobils. Call me crazy, Warren Buffett. According to Buffett, the following companies will perform the best when inflation is high. 1. Businesses with cheap capital requirements and strong capital returns. Businesses with well-known names, excellent profit margins, and little need for financing, such as Coca-Cola and See's Candy, which Buffett owns. Additionally, prosperous software firms like Microsoft can scale their goods digitally while maintaining low operating costs. 2. Businesses have pricing power that can raise prices in line with inflation without suffering customer or volume losses. Regardless of price, they have a good or service that people continuously need or want. 3. Businesses that have little to no need for cash, make regular capital additions, and have room on their balance sheets for leverage. They have little debt, a lot of cash on hand, and excellent cash flow. One of these businesses is Apple. Whether the present inflation spike will end or start to drop is still impossible to forecast. If you're concerned about rising inflation, you might take Warren Buffett's suggestion and invest in useful assets instead of low-yielding bonds whose dividends don't keep up with inflation, such as high-quality corporations with reasonable capital requirements. What do you guys think about inflation and Warren Buffett's advice? Let us know in the comment section. With that, we've come to an end. Don't forget to give this video a thumbs up if you liked it, and if you haven't done so already, subscribe to our channel. See you in the next video.